Hello everyone, my name is Ram Dhamija. Welcome to my channel. So today's topic of discussion is gold and why it should be part of your portfolio. And today is a very interesting day because gold has made yet another all-time high, and it refuses to go down. It has given one of the best returns in the last 1 year. It has beaten Nifty, it has beaten US indices, it has basically beaten everything else in terms of the return profile. And it is emerging out to be not only a safe asset in terms of investing, but also a currency hedge, because what we are seeing is that our currency is constantly being going down, but gold, if you have gold, your purchasing power will be protected. Not only that, it is becoming one of the best places to invest. So today I'm going to take you through a analysis of why gold is important, what have been the returns of gold, and why it should be a part of your portfolio. It is extremely critical. What percentage should it be, and how should you go about it? So let's begin today's video. But before that, I'll just like to tell something about myself. I am an investor, a derivative trader, and a mutual fund distributor. So if anyone is interested in creating a strong, robust mutual fund portfolio, they can contact me through the link given in the description box below, and I shall get back to you with the details how we can go about it. It's free of charge, and you can kindly fill up the form. So let us start off first with what has actually happened. So firstly and foremostly, we can see that gold rate in India has gone to an all-time high now, and you can see that 22 carat gold is actually now, it's 24 carat gold has actually crossed now 1 lakh. And what is the reason for that is that gold prices have started to rally because of two things. One is that internationally, there has been a tariff that has been imposed on the 1 kilo gold bar, and gold prices have hit an all-time high of 1,02,250 for 10 grams. So US has imposed this restriction on import of gold bars, and that is now taking up the price even higher. Now let us look at the gold chart, how gold chart has performed against the INR. So as we can see that gold has really had a run up from the COVID time, and one reason for this is that a lot of money printing had started in 2020. So gold was kind of flat anywhere between 2012 to 2019. It was mostly flat, but once the money printing started, then you can see how it has taken off, and now it has actually crossed 1 lakh per 10 gram. And the major rally in gold has actually come from 22. So 20 it started, it was stable after that for 2 years, but then it has suddenly taken off in the last 2-3 years. It is basically indicating that the money supply in the world is increasing. US has been printing money like nobody's business, and there is too much of money supply sloshing around in the world. That is why you are seeing all the risk assets like Bitcoin, gold, everything has been going up tremendously in value. So this is the chart which clearly shows how gold has basically zoomed off. It has just taken off, and there's no looking back. If you look at this is a very interesting chart. This basically shows the performance of gold relative to our markets, or where it was basically, and how it is performing recently. So you can see that gold had been underperforming the markets for quite some time. So from 2011 to basically 21, for 10 years gold average weightage as a ratio to Nifty had basically come down, but from 2020 it has started stabilizing, and now we are seeing this outperformance also happen. So gold has started to perform better than the markets. One important thing for you to note is that gold's performance versus the markets has been, if the markets are given anywhere between 11 to 12%, gold has also given anywhere between 9 to 10% returns over the last 10-15 years. Why that happens is that, of course, the price of gold goes up, but second and more important thing is that gold is priced in US dollars. So internationally gold is priced in US dollars, and when the value of US dollar appreciates or value of INR goes down, the value of gold appreciates along with it. So that is why you are seeing that 3.5% depreciation that happens in the currency every year gets factored into gold prices, and gold prices move up by that amount. So hence I have been maintaining that you need to have gold to not only get those returns of 7-8%, plus the 3.5 currency depreciation is also taken care of with gold. And now what is happening is that gold has actually started to move up even in USD. So USD, the gold rate has actually crossed 3,500 US dollars per troy ounce. So I'll show you that as well. if you look at this is the last 1 year gold chart in US dollars, and you can see that gold has made an all-time high to 3500. Now this was never the case. Now if I just take you back even till 1980, so from 1980s it was pretty much flat in US dollars. But after that, the money printing actually went out of hand, and you can see from 2005 gold took off. It was at 438 ounce. It peaked in 2011. After that, it saw a consolidation phase. But when the money supply did not stop, from 2018 it has gone up 3.5 times in value. Also, another reason is that a lot of central banks around the world are diversifying from treasuries, US treasuries. So earlier everyone used to hold US treasuries, but after US actually banned Russia for their FX reserves, all the central banks panicked, and from 2022 they have been buying physical gold. So that has led to a huge demand of gold in international banks, and we are seeing that every year central banks have been buying thousands of tons of gold, and that is basically providing that cushion. So from 2022 you can see a sudden spike in gold prices that have come, and it is just not stopping now. So even in US dollars the price of gold has appreciated a lot, and it has gone so you can see somewhere over here 2022, when the sanctions were imposed. After that, it's just gold has gone parabolic, and some people are now saying 5,000, 7,000, 10,000 gold can go in US dollars. Another poorer cousin of gold is silver. Now silver again is not been able to keep pace with gold, but it has started to move. So you'll be surprised to know that silver had made a high in I think it was way back. It has not been able to clear the even the 1980 high for many years. It's recently that it has just cleared. So it made a high in 1980 of 36. It's recently cleared 36 now, and the all-time high of silver is about 50. It is still nowhere near it. So silver has been a poor cousin of gold, and that is actually seen in this particular chart, which is gold to silver ratio. So you can see over here that gold to silver ratio was constantly coming down, but now it has started to move up. Silver has started to play the catch-up game. So why gold, that is established. Also, one more very important thing is that whenever a financial crisis hits, gold actually doesn't get impacted. So it has got a negative correlation with equities, and hence it becomes a very good hedge for you to have in your portfolio. So let's say if you have 60%, 70% equities in your portfolio, 10-20% debt, and you have 10-15% in gold, then if equities fall, then that is hedged by your debt and gold portion. So that is why I maintain that it is very, very important to have a sound, safe asset allocation in place, and gold should be a part of it. Now, how can you buy gold in India? There are various ways. Sovereign gold bond was one of the best, but it has been stopped now. You can still buy it from the secondary market, but there are a lot of calculations that you'll have to do. What is the yield that is there? What is the time that is left, and so on and so forth. So that is a different ball game altogether. But otherwise, there's gold ETF. There are gold mutual funds that one can purchase. So you can just do a sip in gold mutual fund and forget about it. It will keep on adding to your portfolio, and that is where I have mentioned already that I help people build very strong mutual fund portfolio. So if anyone is interested, they can click the link in the description, and I will help you with a very strong mutual fund portfolio in equity, in debt, in gold, and make a well-rounded portfolio which will give you very good returns. So mutual funds is another way you can buy gold, and of course sovereign gold bond we have discussed. So these are some of the ways that you can have access to paper gold. Physical gold of course is there, but then there is issue in terms of storage, in terms of liquidation, etc. With paper gold, the good thing is that it can be liquidated in just one day, so at the same prevailing price in the market. So that really helps in terms of your financial assets. So there is, what is the future outlook of gold? The future outlook of gold actually today, as we speak today, still looks very, very positive, because it has run up a lot. I completely agree. The returns might not be sustainable going ahead, but there is something that we are missing out, because this kind of rally has been going on for some time, and gold is just making all-time highs. It made a small pullback recently, but that pullback has also been bought into, and now gold has made an all-time high. So my suggestion would be that, okay, not to buy lump sum at this point in time, but definitely do consider doing a SIP in gold, because if you don't have allocation to gold, then it is something that is very, very critical for your portfolio that one must have. And there are all sorts of theories that are there which says that the gold prices can double, triple, and so on and so forth. I don't subscribe to that, but the way central banks have been buying gold and the way prices are holding up in US dollars, gold looks like it can do really well going ahead. Irrespective of that, it should be part of your portfolio because it protects your portfolio from downfalls and it smoothens your journey in terms of getting the returns. And the returns have been fantastic over the last few years. Last year itself, the gold has gone up by 30-40%. So in the last 5 years, it has doubled. So the returns of gold are fantastic, and it has been showing in everyone who has had it in their portfolios always get a good cushion, and it adds to the portfolio kicker in terms of CAGR. So that's it from me now. I thought I will do this on a day when gold is making a new all-time high. I hope you like the video. If you do, please do subscribe to my channel and please share it with your friends and family. And I shall see you soon with another update. Take care. Bye bye.